So let's recap what happened today, this afternoon, or the whole day. Today is Friday. This is the last day of the week. It's also the last day of trading a stock. I'm here in face of the stock of a chart for NVDA. NVDA is a tech stock and it's part of NASDAQ. All the tech stock are grouped into the NASDAQ. The NASDAQ has big stocks like Apple, Amazon, Tesla, Microsoft, all are part of NASDAQ. So here, NVIDIA, a tech stock, is part of the NASDAQ. In addition to the NASDAQ, you have the S&P 500, which is which is the group of the top 500 company of the United States, and I'll say those are the top 500 companies in the world. You have companies that are in the NASDAQ that are also in the S&P 500. Those classifications are important, but here I am not treating the NASDAQ as how to call that, as an index. I'm trading NVIDIA, which is an individual stock within the NASDAQ. So today we had this chart at the beginning of the market. So what you see here is that this is the post-market data, and this here is the pre-market. The post-market starts at 4:30 p.m. Eastern Standard Time. After the market close. Some people can still continue to trade until around 8 p.m. So this is represented with the bluish shadow here where I just marked. I just put the arrow. So this is post-market. The pre-market data is everything that happens before 9:30 a.m. in the morning. The market opens in the USA at 9:30 a.m. Eastern Standard Time. Those that are in Europe or in California have to trade earlier if they want to trade the stock market. The New York Stock Exchange opens at 9:30 in the morning. So this was what the chart looked like when everybody got up this morning. Yesterday, so this white area is represent what happened yesterday. So yesterday at market close, you saw NVIDIA had a huge drop. It was actually a red day. All day yesterday was red for NVIDIA. So, and then it continued to drop all after market and even pre-market. This is a very clean graph. I haven't marked anything. The chart has nothing in it. So this is what some people in my group do when they get up in the morning. Some people mark their zone the day before. But what happened is, since the market is continuing to move pre and post, that's after the market it's officially closed, there are still some activities that go on because some people trade post market. But as you can see, the volume after market is really low. And if I can put the chart here on indicator, and I can show you the indicator. No. So here we have a very clean graph. Okay. And we're going to do like very basic technical analysis. What you see here, we are on the 5 minute. I'm going to look at the biggest picture. I want to see what is the general trend of the market. So I'm going to go to a higher time frame. For me, here is going to be the daily. In the daily time frame, one candle represents one day. So this is the graph in which each candle represents one day. So I want to see the general picture of the market. So what I see here is like we have a graph. We have a graph that is coming into a particular zone. See, here you see that the price was first bearish, meaning the price was falling. Now you have a stock that is more in an upward trend. Now, this is a very particular upward trend because the price is getting at the same level where it started, where the bear market started. And also this tells me that the price is very likely to reverse. So we had the bullish market until yesterday officially. Then yesterday we saw the market started to go down. What I'm going to see here, what I'm going to note as a remark is that on the daily time frame, we are in a bullish trend. But the bullish trend seems to me that it's about to end, because we back up here, which is the very strong supply zone. The supply zone is where people sell. Well, the institutions sell. Usually when people place the stock order to buy or to sell, this is where people sell the position, and this is where people enter their order to buy, to sell. So there's a double movement happening at this particular level. And let's go to the monthly. We'll know if this zone holds also in the monthly time frame. So here we see that in the monthly time frame, the zone is still valid. This is a very particular zone, and we know that this could mean that we're in a trend reversal. Why I'm saying that is that we have this sort of, we had something that was descending, a bunch of candles that were more on the downtrend, and the market movement go up and down, up and down, and you have to spot the correct timing, and you have to know the correct direction of the market before you place your entry. Okay, so here we were on a downtrend, then we went in an uptrend. So the assumption now is that we may reverse and go back down to the downside. Let's go to the weekly. So in the weekly time frame, one candle represents 1 week. So for the whole week, we see that we have here, we still in that particular zone. You see, this zone is very strong. We have it in a monthly, we have it in a weekly, we have it in a daily. Now that I see the general trend of the market for 1 month, 1 week, I know pretty much where we stand. I'm going to go to the 1 hour. I could go to the 4 hour, but I prefer to go to the 1 hour. Now, when I go to the 1 hour, they have the zone still holds. You see, the 1 hour is still within that particular zone, because here you see that the stock has reached a level where it had started to fall. Although yesterday, like during the post and pre-market, we were seeing some data reversal, showing some sign of an uptrend, but you cannot make any decision as yet, because you need to see what the market's going to do when it opens. But the post and pre-market data give us an understanding of where what the price action is and where the stock moved. So when I look at this graph, I'm on the 1 hour. I see pretty much the same trend. I'm not going to draw my trend line now, but I'm going to mark this zone and move the upper line down here. You see, we're still in a weekly, but the zones here in the 1 hour is not the same. We have a zone here. You want to mark where the candle wick touches each other. Make sure that they touch. You just mark it there. And I'm going to change the color to red, because this is the selling zone. And I'm going to mark. So you want to see where, you want to mark the area where the price rejects all the time. Every time the price reaches there, it rejects the price. The market has a hard time crossing over that level. That's where you want that's what you want to mark. Now you also want to look at the downsides and see where the market is likely to rebound. So on the downtrend, I'm looking for what is called an order block. An order block is really what create impulse to the upside. So the rule is really like, for an impulse move to the upside, the candle before indicates demand. So I'm going to mark that, like the whole candle is going to tell me where the demand is. And I'm going to leave it here. If you want to draw just a simple line, just make sure you have candle wicks that touch each other's. And I'm going to turn this to green, meaning that's where people are likely to sell, and that's where people are likely to buy. So now we're in a 1 hour. I only want to mark those zones. Now I'm going to go down to the 15 minutes. Now I'm going to see what the market is telling me in the 15 minutes. As I mentioned earlier, we had a huge sell-off on Thursday, and in the post and pre-market, the stock continued to go down. So what I'm going to do here is just mark where the price is at this particular moment. And we know the price is at 270.11. I'm going to mark a line where the price is right now. That's the current price. I'm going to change the, I'm going to put that, let's put it in yellow. Yellow is not very visible. Okay, put it in orange. That's the current price. Now, I am not going to guess where the price is going to go. I suspect that the price may continue to fall, but the market has its own reality, and I'm not here to predict the market. I'm just going to react. And I'm going to have make an informed decision based on my initial analysis. This means that I'm going to mark my zone and be prepared in case the price does one action or another. So here, I'm going to mark this zone and I'm going to label them a certain way. So what I'm going to do is just mark supply and demand. On the downside, because I'm suspecting it's very likely that the price will go down, but in case the price goes up, I still want to be prepared and enter the market. So I'm going to mark my zones. I'm just going to mark 3 zones. You mark the zone where the price is likely to reject. So in case the price crosses a certain area, I'm going to go there to be a buyer or a seller. Okay, that's my first zone. I'm going to draw the second one. And you want to make sure that whatever you draw, the wick touch each other. And I also want to decide whether or not this is something, how far I can go. Okay, we're in the 15 minutes. I'm going to mark there. And so this, I'm going to put the dots, the dash, meaning that if the price crosses this level, I'll be down. I'll buy down to be a seller. I'm going to put it here. Okay. I'm going to put another one. Right here. Now to the upside, I'm going to mark certain area where I suspect the price may reach. So here we have a gap, so I'm going to mark the zone. I'm going to put it green. Then I'm going to mark another zone. This is also going to be green. Okay. Here's my theory. Before I can mark those zones, you see I have the price is currently at $270, about $270. And I know NVDA can move about $3 a day. So I'm going to mark up until 273, and I'll mark down until 264, really. That's where I hope the price could go, depending on how much that particular stock moves in a day. So I've marked my zone. What I'm going to look for when the market starts is this. If the price crosses, if the price goes below the red line and goes down, I may enter to be a seller. If it goes down, for me to continue to make money when the market falls, I need to sell when the market goes down, and if the market goes up, I need to buy. So what I will be trying to pay attention to is any change of direction. So if the price opens bearish, meaning going down, I'll enter to buy, but then I'll exit the position as soon as I see that there's a change of character, meaning that the price is changing direction. That's all I'm looking for. If the price opens up, I'll enter to buy and make sure I exit before it changes direction, it changes character. That's called the change of character for the price to go from bearish to bullish or to bullish to bearish at any time. But I have my zone mark, and let's see how it plays. I'm going to play it a little slower, okay? See, when the market opens, goes down, boom. See, as soon as it crossed here, I'm entering, okay? As I said, usually you don't want to chase the stock. You want the stock to come to you. You want to mark your zone and have your trading plan. I'm only here to make those moves that I've marked, and I don't want to look for anything besides that. I'm only focused on that, and I have a very strict risk to reward ratio. And I'm going to put my stop loss at the particular area. See, it goes down, and then it reverses. See, the price came down here until 267, and then it reversed and went up. See? That's what we call a change of character. That's for the price to go down and then reverse and going up. And you see there's a wick that keeps coming here. And as the price goes up, you can continue to mark your zones. See? So this was a very simple trade today. You know, the market didn't move enough. It was more in a consolidating mode. It only made one range, and it was very difficult to trade this today because the move wasn't that explicit as compared to yesterday where we had a clear move. So someone in my group entered here because they already had an order to sell, so they entered as soon as the market opened. They entered here as soon as they have this change of character, and they were able to catch this move until here. And as soon as the price reached their level, I think they exited somewhere here. That's about like from 67 to 71. That's about how much NVDA can move a day. So they were able to make some profit that way. So yeah, so don't be discouraged. The market is there to stay. You can make mistake and you can still correct your mistakes. So don't be discouraged if you didn't get it right. There's always plenty of opportunity to learn, and don't give up. Just keep persevering, keep being disciplined, and keep learning. The stock market is here to stay. It's a great way to learn about another way of making money and developing a new stream of income. Not everybody is succeeding fast, so take your time. It's going to take you focus and determination to make it, but it's all possible for everybody who's willing to put in the effort. So don't be discouraged and keep learning.